All right, everybody. Hey, honored to have you guys here join us on the Note Nation Top 40 Tour as the virtual bus rolls into Sacramento, California, where opportunities are lying there for residential and commercial real estate investors. Really excited to be talking about this. Obviously, guys, you guys check out the full tour and all 40 cities that will be hitting across the country by going to notenationtop40.com. That's notenationtop40.com. Encourage you to check out any other cities that you're investing in or interested in investing in, as we definitely highlight the 40 cities across the country. But I want to thank you all for joining us here tonight. Taking an hour out of your busy schedule. We'll be out of here in just under an hour. We've got a variety of local and national investors that are joining us live and watching this replay as well. Encourage you to comment, encourage you to ask questions. Obviously, new and existing real estate investors are interested in what's going on in Sacramento. We'll be discussing the statistics and the numbers that you need to keep an eye on. We'll talk about the second half outlook for Sacramento and California. We'll talk about future opportunities, where to look and when to get started. Do you need to wait a while? Do you need to start right now? There's a whole variety of different things to keep in mind when it comes to the Sacramento market. But I'm Scott Carson. Everybody, I want to thank you for joining us here. For those that don't know who I am, I've been an active real estate investor since 2002. I am a big background in finance, mortgage debt markets since 2004. So I really do track what's going on in foreclosures, defaults all across the country. I've purchased over $500 million in debt and negotiated over $1 billion in debt as well for other investors. I'm the CEO of WeCloseNotes.com. That's my company. We've been buying and selling distressed debt and helping real estate investors across the country tap into that niche. I have been working with investors since 2004, helping them with marketing, helping them identify opportunities in distressed markets all along. I'm also the podcast host of a very popular podcast called the Note Close Show podcast that you can catch on any place that you listen to your podcast. So you can also catch all our videos on YouTube at WeCloseNotes.tv as well. Invest all across the country and primarily about 31 markets, but I call Austin, Texas home. So why am I doing this? Why am I taking 40 hours out of my busy schedule? It's more like 130, 160 hours as I'm highlighting 40 markets across the country. Well, I love to help investors. I really do love to help investors out, identify opportunities so they can make the best out of a complicated market. We all know that there's ups and downs. It's hard to keep track of what all the statistics and the media is saying, and you need somebody to cut through and tell you exactly, hey, this is really what's going on and what to look for. I do love to help people solve problems, whether it's investors, whether it's borrowers. I really love helping people to fix issues. It's one of my love languages, helping people solve problems, being the fixer. All right. And I do believe that what's going on right now is the opportunity. What's going on right now is going to set many investors, many people are going to make life-changing income in the next 12, 24, 36 months. We're having another huge transfer of wealth, just like we saw back a decade ago. It is a huge opportunity. And I'm also very passionate about helping people because I was once a distressed borrower. I was once in trouble with my mortgage company. I've been there. I've been through that. It's not a fun time, and I'm very passionate for helping people stay in their homes. And one of the biggest things I can tell you guys, there is nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was the impossible. We've had a lot of people that got in their houses. That was a dream for them, home ownership, but now that's turned into a nightmare. People that started their business, excited to leave their jobs and become an entrepreneur, start their things. Now that's facing really dire straits for a lot of people out there. So I'm passionate that what we can do and what we can share with you tonight will not only help you guys, but also help the people you know and that you're around on a regular basis. I have a big goal of helping over 1,000 investors tap into the world of debt investing, helping borrowers, banks, investors all across the country here in the next 12 months. I want you to love, and I invite you to be a part of that 1,000 people as well. Our mission is to help investors to accomplish their dreams and increase their wealth through debt investing. They're learning how to become the bank and really capitalize on the opportunities that the economy is giving us right now. A lot of people are scared to death, but when there's blood in the water, it's the time to act. When people are all running one way, you run the opposite direction, and you'll often come out smelling pretty good. And that's the opportunity we have right now. Markets keeps going up. As long as the market keeps going up, everybody can make money if you're buying right. Well, what's happened is the markets shift, and people are scared. People are freaking out. Now's the time to act to make sure that you're going in the right direction. Let's talk about what the national numbers are saying. 1 out of 9 people are unemployed. We got 11.1% unemployment rate. as of last month. We'll dive a little bit more of those numbers here in a little bit. There are over 40 million people collecting unemployment at this point. That's a scary number. People are actually collecting, a lot of times people are making more money on unemployment than they were actually working. There's something wrong with that situation, okay? Over half of our small businesses are expected to fail. That number increases each day or each month that states are closed across the country. 10% of the homeowners were already struggling to stay current. 1 out of 10 was already behind on their mortgage before coronavirus hit in March. You think they gotten any better? No, it's gotten a whole lot worse. The national mortgage delinquency rate is 7.76%. 1 out of every 12, 13 borrowers out there is delinquent. That means not just late, delinquent, like 90 days past due. Currently, 4.1 million Americans are currently default out there, default on their mortgage. You remember, everybody, in 2008 to 2010, if you look back at the last time, it took us 18 months to get to our first 1.6 million defaults from 2008, okay? Well, we're 2.5 times past that amount in a quarter less. Do you think we're going to get a lot worse than it was in 2008? Yeah, I think we have the opportunity to see some really bad numbers. Some bad things happen, economically speaking, but that also leads to a lot of opportunity for those that are willing to understand and realize now's the time to act. Obviously, delinquencies across the board. We saw a 21.8% spike in non-prime, subprime mortgages with everything, 12% on prime loans. We saw reperforming loans have a 6.4% increase in defaults, along with prime or A paper mortgages also increased by 5%. So 1 in 20, basically A paper lenders defaulted over the last couple months. And if you look at Sacramento, how does Sacramento land? Since we're talking about Sacramento, unemployment has actually gotten better a little bit from April to May. We don't have the June numbers out yet from the Bureau of Labor Statistics. You can see it's dropped a little bit. We went from Sacramento went from 4.8 to 14% between May and April, and the number honed back a little bit from 14 to 13.6. Still a tremendous amount of people that are unemployed in Sacramento. Now, if we look at the California unemployment rate, California went from 16.4 to 16.3. It dropped a little bit. So that's a good thing. It did drop a little bit, but it's still, you can see California is higher than Sacramento, which is great. That's a really good thing. It's a little bit better. It means there's still a lot of people hurting is what I'm trying to get at. Look at the foreclosure numbers. These are May's numbers. Sacramento had 1 in every basically 9,000 homes was in foreclosure. The biggest zip codes hit was 95832. It was 1 in every 3,200, and then 1 in every 52, basically 5,300 for 95818. And you can see on the map here, you have light blue versus dark blue. It's the difference between the haves and the have-nots. So you have low versus the high, and that if you think that number is going to increase, you are correct. That number is going to increase. That's not including what's going on in June, July, people getting further in default. And if you look at May's numbers, there were pre-foreclosures on the market. It was down 25% between April and May. It was also down for auctions about 50% and down for bank owns roughly 33%. And you look over year too, is also down across the board. So that's a good thing from 2019 to 2020. But we all know California has put a big kibosh on foreclosures for a while. So you're going to see those numbers continue to drop off the board like they did in April. That number is going to be low through the end of the year. Okay. Numbers are down all across the board, month over month and year over year with the foreclosures, the auctions, and the bank owns. That's not really a surprise. And you can see that number as well as far as the numbers. It's going to be low for a while, extremely low for a while, especially with this going on. Now, Sacramento put a moratorium on tenant evictions. That extended it here was extended based on governor executive order issued on May 20th. The ordinance now is extended to July 28th, which is another 2 weeks out from when this is recorded. That number is going to be also extended out for commercial properties until November. Okay. That's a sad thing. Be until November, October is well delayed. So you've got another 5-6 months people aren't going to be paying. That's a scary thing. Tenants still have 120 days after expiration of the related moratorium to pay back rent and avoid eviction. The city ordinance. That's not a good thing if you're the landlord. That's not a good thing if you own the commercial property and you're renting the property. That's another 4 or 5 months without a lot of rent. Okay, and they've got basically, you still got to notify them the day before. It's a messy thing. We all know going on there. Let's talk about the foreclosures in the pandemic, the pending foreclosures. Here's the default rates across the board for Fannie Mae, conventional loans, Fannie Mae, FHA, VAs, and all loans ago. Yes, the FHA loans are at roughly 10%. That number is going to increase. Why? Because people getting in FHA loans, that's like the subprime when they couldn't get subprime. Means they were putting basically very little down, less than 3% down or 3.5%. And then banks were donating the down payment a lot of times. They're paying that and then also paying a ton of money towards their down payment. 10 grand Bank of America was paying, plus the down payment for FHA loans. Getting very greedy out there. You're going to see it's come back and bit Bank of America in the butt. We all know forbearance numbers continue to shrink a little bit on a week in, week out basis. They have spiked in other parts of the country. California, they continue to retreat a little bit at a time. Still roughly 4.6, 4.7 million homeowners in forbearance agreements out there. Obviously, you can see Fannie, Freddie, FHA loans, other loans there. That number is going to stay pretty stagnant like that for at least the next 6 months till October, November. Now, if you look here too, I thought was an interesting chart. The seriously delinquency states across the country. This is year over year. So the 90+ delinquencies year over year. Florida basically had no change. They did a study and looked at the top markets out there. There were some markets obviously out there that they did increase. All right, some decreased, but some big counties did actually increase in California. All right, their numbers went up in delinquency for 90 days past due, including loans and foreclosure here. So that's a scary year-over-year increase when you get down on the county and the metropolitan areas there. Okay, something to keep in mind. And now, is that good news or bad news for us? Well, California as a whole really has a lower number. One out of 20 borrowers is in default, about 4%. California's a little bit higher than the national average, 5.9% current default rate across California. And it's a little higher, but that's California as a whole. In some places it's higher, other places it's lower. The more the rural areas are actually a little bit more higher versus your really high populated areas. Now, the thing about California, you do have longer judicial foreclosures when it comes to Fannie Mae. It's a non-judicial foreclosure, but it can still take 480 days to foreclose on your traditional Fannie Mae FHA foreclosure timeframes. Okay. Now, with all the backlog of forbearance agreements, it means it's going to drag that 480 days out even further. If you're going to wait till basically October, November to be able to start the foreclosure eviction aspect of things, if you're the bank, are you gonna see some opportunities now, or are you gonna wait if you're waiting around for that? So it's gonna be a while before foreclosures do hit the market in an increased number. Probably 12 months at least, if not 18 months, in states like California that have dragged stuff out and then really are tenant friendly or borrower friendly to drag stuff out. So that's something you got to think. It can be good or bad news depending on which side of the ball that you're on. Now, what about commercial debt? We see a lot of for rent signs. We've seen a lot of boarded up businesses. We talked about that. Sacramento's put a kibosh on evictions on the commercial side for a while. 52% of small businesses are expected to fail. We see that number going to be increased as this continues to drag on. Now, commercial real estate's been a big boom for a while, quite a bit of a boom, but we've seen that come to an end as well. Now, looking at some of the commercial defaulted numbers on the different asset classes out there. 1 in 4 hotel loans are in default. Yeah, 25% of the hotel loans are in default out there, everybody. And that number gets worse actually for the smaller company. The bigger chains, okay, they've got some preferential, but the smaller mom and pops who are taking out a lot of financing, gotten traditional bank loans on their stuff, are really hurting. Same thing, 1 in 4 retail loans. Retail has been on life support for a while. A lot of the malls, 50% of the malls are expected to fail from what's going on. Office vacancy is set to increase to roughly about 20% on average nationwide. Expect another 15% vacancy rate for retail and restaurant space, if not more, depending on how saturated the market is. We're expecting to see rents on commercial property drop another 10% by the end of the year and decrease another 4 to 5% going into 2021. Now, what does that mean? Well, if you're going to take on a commercial property, it's vacant. You're going to have to expect really only be able to charge 80 to 85% of what market rent is today, or 2 months ago. That's what your rent would roughly be, probably expect to collect. So you got to adjust your numbers. We know the delinquency rate across commercial mortgage markets is tripled. It's gotten ridiculously bad, specifically in places where tourism is big, your hotel chains, your tourism attractions, anything around that has really gone through the roof. Okay. Now there's a big amount of loans on both sides, not just the big boys, not just the CMBS guys. Okay. It's also the banks. And this time around is different than it was 12 years ago. Okay. Only about 20% of the loans that are considered risky right now were financed by CMBS compared to 64% 12 years ago. Now it's the banks have issued a lot more of this debt. All right. Your commercial banks have issued at least 53% of the distressed notes. And it's only the tip of the iceberg with what's going to happen. And they're financing stuff at 69, 70, 75% of value when they financed it. Now, what happens to your commercial property owner when the market value drops in the property? When it starts dropping, and a bank has in the mortgage clause, that if it drops below 70%, you've got to bring money to the table to pay that loan down to stay that ratio. Most investors aren't going to have that. Most property owners aren't going to have that extra 5, 10% cash, which turns into a defaulted mortgage. The bank wants to get that stuff off their books. And you're going to see a lot of that taking place, especially when you see values dropping when we lost over $50 billion in the commercial mortgage markets in March. Huge amount of stuff lost. There's a lot of people going to be, a lot of banks going to have a lot of debt out there. Now, if you're in the commercial investment space, this name should ring a bell for you. Carl Icahn, big commercial real estate investor. He's been talking about since March how it was going to blow up and be worse in 2008. And we've seen that happen. He believes it's going to be a whole lot worse. Nobody was even looking at that market for the most part. It wasn't getting as publicized as the residential markets. But we're seeing that shopping malls, houses, corporate offices, there are real big issues across the country, not just in Sacramento, but other places. Office building, hotels, retail, lots of shopping malls. It's all going to be like another tsunami. It's going to be an absolute collapse of those markets. And that means for a lot of opportunity, you can pick up a lot of assets, commercial space relatively cheap. If you know how to work it, if you know how to pivot those assets, you have an opportunity to be creative. All right. Literally seeing 20, 25% default rates across board. I mean, there are mortgages on commercial hotels, big hotels being sold for a fraction of value. I mean, there's big hotels in New York, primetime New York City, going for 22 cents of what's owed because they want to get them off their books because it's the value. Banks stand to lose roughly about $50 billion on loans. And that's just the bank's aspect of things. Bank of America is being hit hard, Wells Fargo, Chase, Citi. There's some other non-banks, American Express, also a big chunk of their money in the commercial real estate space. Bank of America announced today that they set aside billions of dollars for the loans that they source that are horrible loans, okay? They've set aside, get this, $5.1 billion in reserves because a bank has to start putting money away before they sell the notes off in reserves for their banks and regulation. And they've started putting away $5.1 billion on the side, okay? That's a lot of money. That's a lot of loans, billion for just one bank. Now we know Bank of America is often the bellwether cow because they have a lot of the residential, they got a lot of commercial stuff there for American, but they have a lot of stuff that's going to be hitting the markets here. So where are the opportunities? Are you going to go out and buy foreclosures and REOs? No, that's going to take another 12 months before your foreclosed properties, residential, commercial at the market. Do you want to buy fix and flips? Well, no, you want to buy that because the funding's dried up for that stuff. While your hard money lenders have pulled their money off, waiting for the distressed markets to kick in so they can pick up a lot of stuff cheap. Okay, rentals. I don't want to be in the rental business right now and not have to have something I can't collect rents on for 6 months or evictions for 6 to 12 months. That's not a good thing. The real opportunities in the debt game. Okay, the opportunities in the debt game because you can buy this stuff at substantial discounts. You're going to start seeing residential notes banks offering up to move, whether it's a one-off or a bulk basis in the fourth quarter. Why the fourth quarter? Well, they've got basically a 6-month time frame from March through September, October to evaluate their portfolio, be able to figure out the risk tolerance and the risk ratios, what they have to move. And they would rather get the fourth quarter, these bad loans off their books, technically in forbearance agreements, off their books, and let somebody else deal with it before they have to reassign new or do their financials for the end of the year numbers. They'd rather get off their books in the fourth quarter, let somebody else deal with it. And they're going to sell the stuff at a discount. They're going to be forced to. Okay, that leads to a lot of opportunities for debt investors like you and me to step and buy that stuff at a substantial discount and then work out agreements with the existing tenants, the existing borrowers to keep them in place. We're going to see it already we are already seeing a lot of commercial notes hitting the market right now. I've had conversations with some of my guys on Wall Street in California, where you guys are located if you're watching this from California, that they're already seeing a lot of distressed debt, a lot of distressed deals on bigger commercial properties they haven't seen in years. And they're like, Scott, in the last month, we've seen more great deals than we saw the last 2 years combined. It's a buyer's paradise right now if you got cash or you've got investors behind you that you can take some deals down. But you've also got to be creative. The traditional, buying the asset and have it operating if it's non-performing and expecting to turn around isn't always the best thing. Here's a great example. This is a hotel in Arlington, Illinois, that the owner just said, screw it. We're only seeing like 5-10% occupancy because there's a glutton of it. What they do, they reposition the asset as an apartment complex. They turned it into an apartment complex. And you check out one Arlington by Googling that in Arlington, Virginia, the pictures will show you how well it's done in converting this residential property, which was for a hotel, into a multifamily property. Phenomenal. Our buddy Garrison Gilbert is doing the same thing in Pennsylvania, taking a 55 unit and turning it into a 42-bedroom apartment. He's repositioning the asset because he can pick it up cheap enough. All right. Same thing in other asset classes. Some people are taking office space, like this guy in Seattle is taking this this is in Denver, not Seattle, 170 unit office space and converted it to self-storage. It's already basically a 10 by 10. So what he did is just slapped the locks on, changed some locks, and turned it into a self-storage facility. 7 parking spots covered. It's a brilliant strategy for people out there. All right. People will pay for years on self-storage when they'll move out of an office space. I think that's a brilliant play if you can structure it properly, if the building is set up to handle that. Now, the biggest opportunity that I'm hearing over and over and over again is the local real estate investors picking up commercial assets that are in that sub $2.5 million value and being flexible with the tenants or the borrower, being able to modify, being able to do agreements. And if you can pick up the debt at 30 cents on the dollar, that gives you a lot of flexibility to forgive rents, to keep the rents down, to extend things, to modify the loan, and really turn it into a win-win and still get a great return on investment. And this asset class is the biggest overlooked niche by the big boys. Big CMBS guys don't want to do anything less than $5 million. Your banks really do make their bread and butter on that $5 million or below, especially at $2.5 million, million plus. They're also a lot more flexible. We have bought loans where there's $1 million balance on it. It was non-performing. We took it over in receivership, going through the foreclosure, got the borrower to sign the property where we took over control of it, and the bank was willing to finance the purchase of that note. They're willing to put it from the non-performing side to the performing side because we had the team in place. And so there's a lot of opportunity for you to be able to do that. And so 53% of that stuff that's distressed out there is bank financed right now. Now, are there banks in trouble in California? Of course there are. We know. We track roughly about 2,000 different banks all across the country through a Bauer Financial report. So Bauer Financial is a bank rating agency. They take a look at credit unions and banks, and we buy the quarterly report. Once they look at it, they rank it, give it 5 stars, 0 stars, whatever, share the numbers in it. California is a big state. We know there are thousands of banks that have offices in California, but out of those, there are 45 major banks off the Bauer Financial list that their main offices are, they call California home. And while it's hard to track who's lending on what and who's got banks everywhere, the 45 in California have $2.3 billion in loans currently in default, in 90+ default status. That's $51 million average, roughly. Okay? The $51 million average of non-performing notes on their books. Okay? It's basically a 3% average across the board. Okay? That number is going to get worse because they already have roughly that same amount, if not more, in 30 to 89-day accrual. So when the next quarterly report out, if it's not gotten better, that number is going to double. Okay, it's going to get to 6%. It's going to get to 8% if it goes on for 2 quarters. We know that number is going to happen. You can see it already by just looking at the numbers, and that leads to a lot of opportunity. It also leads to a lot of bankers wanting to move stuff off their books. Okay, out of that number, over half of that 2.3 is 1.4 billion if it's in single-family homes. Now they may not be moving it right now. They'll be waiting to see as we get to the 4th quarter, but that's a huge opportunity because there's a lot of borrowers that are in default. And the 2 biggest culprits with the biggest portfolio of those based with home offices in California is Union Bank, which we bought from before, 100 million plus in defaults, and CIT Bank with $263 million in defaults. We've bought notes from both of those banks before on the commercial and the residential side before over the past 10 years. They'll sell. All right, you're not going to go buy from Bank of America, Chase, Citi, Wells Fargo. Those guys are going to move that stuff. The residential side in $50 million tranches are bigger, but the commercial side, yeah, if you can get a hold of the right person at the right bank, you can get some stuff moving. That's kind of what we do. Why buy the distressed debt? Well, you're going to get deals now at substantial discounts versus waiting for it to come out at the very end of the foreclosure, where if a bank is taking an asset to foreclosure, they're going to sell it close to market value. The days of getting stuff at foreclosure auctions, 20, 30, 40 cents a dollar, doesn't happen. It does happen, though, on the debt side. Okay, the bank's got to foreclose. They can put all this money into it in time and energy. They're not going to take a big discount at the foreclosure auction. They're going to try to sell it as close to value as possible. Why would you want to buy something at value? You want to buy it below value, and that's what we do in the debt game, buying it at a big discount, and then work it out with the homeowners or work it out with the borrowers or the tenants in place if we have to in the commercial. Get some significant discounts based on location, foreclosure timeframes, values, where they're at, what the location is, the asset class. And if you buy the debt, you control the asset, especially in the first lien position. That's all we buy is the senior liens. You get a big discounts on that. I don't spend much time on the junior liens because I'd rather be in the senior lien position, be easier for me to control the property. And I can also wipe out that junior lien if it's the value's dropped quite a ways. I don't want to be in a junior lien position right now, not at all, because they're the low man on the totem pole to get paid these days. Okay, there are a variety of strategies. We have about 10, 11 different strategies, depending if it's residential, commercial, loan reinstatements, modifications, short sales, short payoffs, foreclosures, loan sales, deed and lose. Wholesaling is an option as well. You can flip the deal to other investors. If you're a commercial note investor and the borrower is basically collecting the rents but not paying you, you have a right to collect the rents on your behalf. Cut the guy out, and that eliminates a lot of the ATMs that we see happening in distressed markets. Okay, take over the note, turn it into a cash flowing asset, performing note. If you especially bought it at a discount, great, get the borrower paying on track again. If you bought it at 50 cents on the dollar and you can get them to start paying on time, forget about 6 months, that's a 200% return on investment for you if you can keep them going for a while. Take over the property and do what you want with it if you want to. You want to keep it, you want to pivot it. You just got to be careful in the vacant assets that you've got a plan of action because there's going to be a lot of vacant commercial properties. At the residential, hey, residential is pretty easy to fill. We all know that the residential markets are still a lot of strength, especially in that first-time home buyer, that first, whatever that's average medium home buyer price is for the market. Sacramento, and I think it's like 350. So anything below 350 and below, hey, should move relatively fast. It's when you start getting that 500 or above, 500,000 or above jumbo loan product, that is really being hit hard on that stuff. Other advantages of note investing, we don't have the direct mail costs that your traditional real estate investors do. I mean, we're not mailing out 5,000 postcards on a monthly basis. We're not mailing out 10,000 postcards. That's a waste of money. We don't do that, okay? We go direct to the banks. We don't chase one property from one borrower. We chase one bank with hundreds of notes across the country that we can cherry pick from. And if you've can email and you can jump on LinkedIn and connect with people and you can pick up the phone and call them, you can do this business. You don't have to put in 40 hours a week. If you can do 5, 10 hours a week, you can dive into the note investing game. One source leads to regular deal flow on a regular basis, not, I'm one phone call, one property, and I got to go hunting again. No, that's not the case. Yeah, you've got to hunt a little bit. It might take you 50 phone calls to get a hold of 2 or 3 people that have stuff for you, but those people are going to have deals for you all the time. And if you make 50 phone calls, you're going to knock it out in 4 hours to find deal flow, okay? One source leads to regular deal flow, not one property. It's a big thing I want you to know. If you get a portfolio, and guess what? Cherry pick. You ain't got to buy them all. Most of the banks should be like, hey, buy something right now. Please just buy something, buy anything off our books, okay? And if you want to do it in bulk, you want to buy mini bulk or a few or raise some capital it all together, great. You're going to get, well, what? You're going to get even better discount, okay? Yes, you can do this with residential assets. Yes, you can definitely do this with commercial assets. Doing the same basic theory. I mean, it's the same type of marketing, reaching out on a regular basis. And if you want to raise capital from other investors to fund your purchases, great. That's a good thing to do. You don't have to use your own funds, okay? If you don't have money, guess what? I didn't have money when I got started either. I had to raise capital. And you can do the same thing. If it's good enough for Warren Buffett to raise capital for a thing, it's good enough for you. And there are a lot of investors out there looking for deals. And if you think back at 2010, at the peak of the last market, okay? 2010, there was 15 million homeowners underwater in 2010. We're going to get close to that market. We're going to get close to that number, if not surpass it, because it's a crazy time out there. We all know that. Now, a lot of people ask me, well, Scott, there's no investors out here. I'm brand new. I don't know where to find them. Well, you know what? They're all around you. There are investors in every county, every city out there. And if you're looking in Sacramento, guess what? There's $9 trillion in retirement funds all across the country. And in Sacramento, there are 21,000 investors with an IRA who live in the Sacramento area. 21,000 with an IRA account, okay? Now, out of that 21,000, there's 14,000 of them. It's just Sacramento. We're not talking LA. We're not talking San Francisco. We're not talking Marin County. We're talking Sacramento there. 14,000 of them have 150 grand or more in their accounts. How would you like to know their addresses? How would you like to know their names? How would you like to know their emails? We show you how to do that. We have access to that stuff. Now, the beautiful thing is there are 14,000 real estate investors in Sacramento as well. Those are 14,000 people in the population that rank themselves, call themselves, pay taxes as real estate investors. So there's plenty of money, plenty of buyers, plenty of investors. You just need to go find that missing link, that deal. And there's such a deal flow getting ready to roll. You've just got to pick up the phone and start calling. And now everybody's in the note business, but most people are the banker. I mean, they're not the banker, they're the borrower. If you've got a mortgage, a car payment, student loan debt, medical debt, credit card, you owe money to Baba Joe down the street. You're in the note business, but you're on the wrong side. Payment streams are going out. We don't want that. You want payment streams coming in to the bank. And you want to be the bank in real estate investing because the bank isn't into fix and flips. They're not into the rental market. Banks are in the note business. Okay, they're in the debt business, and the bank always wins. The bank's going to win in foreclosure. They're going to win in modification. They're going to win by arbitraging funds. So instead of trying to beat them, you might as well join them and beat them at their own game. And that's what I love about this business, everybody. How do you tap into this tsunami of deals? Well, I've been teaching real estate investors about notes since 2010. I've been doing it for over 12 years. I've helped thousands of investors purchase their first NPN, that's a non-performing note, or performing note if that's your cup of tea, on either residential or commercial properties. We've done a ton. I said over $500 million for our own portfolio, over $1 billion in other investors taking down deals and helping them, okay? Started off commercial deals. I've been talking for the last 2 years that my spidey says, like, this can't last. This cannot last, what's going on. And of course, I'm right. Of course, you're going to be right at some point. But I'm saying this is long overdue, okay? Now, if you're looking for cash flow or asset growth, guess what? You can do both with this stuff, okay? You can buy one-offs. You can buy in bulk. There's a lot of opportunities out there. We have seen investors trade on average of their first deal somewhere around 25 grand. Depending on where it's at, that number may be different, obviously, but all the way up to 5 million. Cheapest note I bought was $7. Okay, you know, I've bought anywhere from a one-off asset to 185 assets. All right, I've looked at trades of 400, carved those down to 200, carved that then down to the 185 from due diligence. The beautiful thing, guys and gals, is it's a different mindset, but also you're so much closer to the spigot. You don't want to be down at the end of the hose where the foreclosure is. You want to be as close to spigot to whoever financed that property to begin with. Because if you step in and the bank is motivated to move to get 50 cents on the dollar, to get 40 cents, get 60 cents on the dollar even, it's a win for you dramatically. And I don't care what your credit is. I don't care if you've been through a divorce, a bankruptcy, whatever. Bank doesn't give a rat's ass. They're not checking your credit for the note business. You don't need your own funds. You don't have your own funds. We've already talked about there are thousands of investors out there. And a lot of, just a little bit, just $9 trillion in retirement funds that need to be put to work, okay? Like I said, you can do this if you get on, can send some emails. You can follow some scripts. Pick up the phone, dial for dollars with some scripts. Know who to call, when not to call, and then follow up with those people on LinkedIn. You can do this business just a few hours a week from your home or office. And you know what? You don't have to big office. You don't have to have big overhead. There's some normal marketing costs like with anything, but it ain't the 5,000, 10,000 direct mail cost. It's a fraction, a percentage of that amount to really make some things happen. So I don't care whatever your focus is, whether it's single family homes, whether it's apartments, whether it's hotels, retail, self-storage, malls, mobile home parks, assisted living, medical office. There are deals in all asset classes out there, everybody, okay? You can truly create win-win stories, not only for you, but the borrowers that you end up helping out. And for every property that goes in default, it doesn't affect that property and borrower. It affects the neighbors, it affects the street, because once it goes to foreclosure, it's going to drop the value and impact everybody in the neighborhood, everybody in that community, everybody in that zip code, in that county, all gets affected by distressed sales. We saw it. We know it's going to happen. It's up to you if you want to do something to help that person stay in the house. All right, just like we did with William and Sheila here. They lived in this house for 18 years, took out a refinance, pulled some equity out of their property to fix the property up, pay some bills, and you know what? Boom, market dropped out from underneath them. They've been trying to do a loan mod for 4 years to stay in this house. We bought their note at such a substantial discount. We negotiated a loan mod, and we were able to cut 25 years off their mortgage payments. Instead of them paying for 33 years, we cut it down and got them where they could own their house in 8 free and clear. And absolutely, those are the type of stories you want to help. You want to help people stay in their house, people find that dream of homeownership and get away from that nightmare. You want to wake them up from Freddie knocking on the door that they're scared of. That big bad bank is going to come foreclose on them. Why don't you be the big good bank? Or the badass investor who rides in like a white knight on a white Mustang, a white stallion, and saves them from foreclosure. That's a beautiful picture to tell. It's a beautiful story, even more to talk about. And we have helped hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of borrowers stay in their house and avoid foreclosure. It's truly a win-win scenario, everybody. Okay? And I don't care if you need to do it big or you want to start off doing it small. A lot of investors start off small. I think it's a great way to get your feet wet, get your systems in place. Kind of like our buddy Gene here out of Indiana. Gene was working as a hotshot driver, driving cars, dabbling in real estate, buying a little fix and flip here in Elkhart, Indiana. He was kind of scared, nervous, trying to just use his own funds, and there was limit on that, like many people do. We run our own funds. We trained him. He came to our training. We got him to start thinking bigger, start raising some private capital. Fast forward about 4 years later, he's raised over $13 million, $14 million in private capital for his own deals, closed on over 135 deals, and obviously made a big difference in his life. And he's not just buying in Elkhart, Indiana, he's buying in different states and really creating a lot of win-win scenarios out there. Absolutely proud of what Gene has done. And of course, Laura Blanc has done an amazing job. She's an investor that was living here in south part of Austin, just moved to her dream home in Maryland. Just this week, actually, the last 2 weeks. But she started off like many investors, wholesaling, trying to do some options, trying to do what she could in networking, trying to be a deal architect. It was really difficult because when she lived in a market like Austin, that's a competitive market. She learned a note business, picked up a couple deals, worked through them. Second trade was 14 deals. And then she's working on a big trade now of over 100 deals. Now, she's bought about 100 assets in the last 2 years for her own portfolio and done some really great things, changed her life. She's about to close on this big $4 million trade, 100 plus performing notes that are going to be not only life-changing to her, but to her future, to her sons, and to her family as well. So we're really proud of what Laura's done, okay? Now, our buddy Keith Collins out of Ohio here has done a great job as well. He's been in real estate, been in city governments, created water treatment plants, done a lot of great stuff in and around the Ohio market. Got into the note business, started learning what we were teaching. He's like, oh my God, this is great stuff. Applied, took our training, and he sent me an email about a month ago, say, Scott, this has been amazing. We will make over 7 figures this year because of what you've taught us. We'll make over 7 figures this year because of the tactics and the teachings. He goes, I don't ever want to go back to rentals. I don't want to go back to fix and flips. I love the note game and the note business. It's where it's at. Now, these 3 people obviously had some real estate experience. You know, they're a little bit more seasoned, okay? But you don't have to have experience in real estate. You don't have to be a little bit older to do things. We've got students that are doing amazing things, getting started, just like Raphael here. Raph's out of San Diego, business owner, owned a car detailing business in San Diego, is doing well with that. Didn't own a home, got in the note business because he liked real estate, was researching some things, but hadn't pulled the trigger on a single deal, right? Didn't even know about real estate investment clubs, okay? I had heard about private money, but didn't know much about that. Well, he came in, took our training in December. He immediately bought 2 deals in the first 2 weeks. He closed on 2 deals using his own funds. He since has raised about $150,000 in private capital, bought 3 more deals. On the 2 he bought immediately, he got those reperforming at a double-digit return on investments in his own fund. The 2 that he's selling, or the second 2, he's selling at a nice profit of a 20% profit in roughly about 6 months from the time he purchased them. And then the 5th one he's still working through. But if he didn't have the note business, in his words, he'd be hurting a whole lot worse. He had to lay all 15 of his employees off because nobody's getting their car detailed during a stay-at-home pandemic. If they're going to wash their car, they're going to do it themselves to stay busy and occupied. So he had to lay his employee staff off, and he's so thankful. His words like, man, I'm so grateful that I got this. I'm making money. I love this. Is all I want to do now. And he's off and changing his direction, changing his future. How many of you have something you're doing right now and you wish there was a way to change your future, to get out of that job, to provide extra income for your family, to be able to retire, to take a vacation, to get the heck out of Dodge if you need to pay for retirement, to pay for college education? Take that vacation that you've been wanting to take without a mask, okay? There's a lot of opportunities out here, and I don't care if you start small or want to go big. There's a lot of great ways out there to do things, okay? And we've done it. We've helped hundreds and hundreds and hundreds of real estate investors over the last 10 years do amazing things, not only for their own lives, but for their families' lives and their future, and also their community. They're investors making above average returns, finding deals that kick ass and take names. And I'll tell you that we love working with investors who are going to take advantage of what we teach them and the true tactics and solutions to go make some things happen. And there are people out there will tell you can't buy direct from banks. That's a bunch of bullshit. You sure as hell can. I've been doing it for 10 years now, and I continue to buy from banks. I can have banks reach out to me and lending institutions reach out to me to see what notes is. And you don't have to be Scott Carson. There's over 4,800 different banks and a ton of lending institutions out there that have notes on their books they're all looking to get rid of. You don't have to be Scott Carson. I can't buy it all, okay? I can't buy it all, and that's why I teach people. That's why I've taken time to really put a class together. I've been teaching for 10 years, Educator of the Year a couple times, all right? And that's why I want you to be one of the 1,000 that we can help this year. And how do you do that? Hey, check out our Note Weekend class. It's a 1-day online live training via Zoom, just like this. I'm teaching basically all day. And we've got one upcoming here. We usually host it about the 3rd Saturday of the month. It's a 1-day, all-day event with yours truly speaking from 9 a.m. to roughly 3, 4, or 5 o'clock in the afternoon. Depends on how many questions people ask. I stay around to the end. Like I said, we live stream on Saturday. We get the replays out to you immediately. So if you've got to miss a session or two or got to do something, you can watch the replays that next day immediately. Our students call it the Cliff Notes of note investing. You're not going to learn everything about the distressed note market and note investing in 1 day. I mean, you learn a lot in 3 days, but you're going to learn more from taking action and buying assets. But you still have to have a foundation. I was talking to 2 investors today. They're like, oh, we wanted to buy notes. We bought 2 notes. So I'm like, have you taken any trade? Oh, no, we're big fix and flippers. I'm like, well, what'd you pay for the note? I said, what's your strategy? I'm like, well, that's not going to work now because you overpaid for the asset. You actually bought the notes technically way overpriced because you thought you knew what you were doing. And I'm here to help you. I'd rather make avoid you on the headaches by learning from the mistakes I've made for the last 10 years, okay? Normal price is $99. We've dropped it down to $49. We cut the price in half. So it's a very affordable cost for you to dip your toe in the water to see if it makes sense for you. To see if it's I want to learn more about this. Hey, I want to take it to the next level. Or like, no, I don't want to do that. That's fine. Great. But at least you'll walk away much more knowledgeable about what's going on and the options that are available to you and the borrowers and the banks out there. Like I said, 3rd week of the month, July 25th is the next one. After that's August 3rd Saturday. What do we cover? First full part of the morning is all about where to find notes. Second part is about how to fund these deals with other people's money. We'll show you how and what to say, what not to say, not only to your investors, but also the banks. We'll show you how to build a list of over 2,000 bank connections that you immediately reach out to, okay? We'll talk about the different exit strategies, how to make money with notes, okay? We'll talk about the different vendors and the team that you need to put together. The vendors that are waiting for you to give them a phone call. Our preferred vendor list that love working with our students because their students, as they say, not my words, are the most educated and the most ready to pull the trigger. Okay? They have the least amount of headaches with our students because our students know exactly what they're doing. We'll even share with you some loan trading platforms, some individuals. There's not a loan MLS across the country, but there are some websites out there that I've lists already for you, deals for you to take a look at, commercial and residential, that you start looking at, start making offers on, start working your due diligence, start getting your systems in place, and we'll walk you through those. Okay, we'll cover a whole lot more at Note Weekend. And if you can go to noteweekend.com, that's where you get signed up for it. It's just $49. We'll throw in some extra bonuses for you. So give you an idea on it. Like I said, the one-day class, normally $99. We're going to drop it down to $49. The one-day calling banks training, this is a special 4-hour, 5-hour session of me calling banks that you get to watch, you get to listen, hear the conversations that I make. Yes, I actually call banks. I'll call about 50 banks in a 4 to 5 hour period. You get to be a fly on the wall. You hear exactly what I'm saying, what I'm not saying. You see the follow-up that I do. It's much more valuable than the normal $49 that I charge, but that will throw that in. And that's recordings. We'll throw the replays that. We'll give you the most recent quarterly Bauer financial list for June. That's a $360 value, showing you the banks are in trouble. Who have the most amount of defaults? Who's got what in their books they need to get rid of? That's literally, here's a cheat sheet. Here's your cheat sheet to start calling, okay? After the one-day class, we offer up where you can get a 30-minute one-on-one with us. That's usually $500 because I charge $1,000 for consulting per hour. That's included. All right, after that, too, if you, like I said, the replays are included. If you want your spouse or existing business partner to attend, guess what? It's online. Let them come on in. That's included. And then, of course, we've got an amazing private Facebook group for our students to be able to network, to ask questions, to really be able to add other vendors. If they run into a situation, they can jump on there and have a lot of experienced people, including some of the people I mentioned on there that are part of that group to help you out there. So all those added together, over $1,000 in bonuses that we're throwing in along with it. And like I said, it's all for just $49. So love for you to be a part of it. And why should you do this? Well, hey, you learn how to help borrowers and investors besides also helping yourself. You're going to be making money solving issues. That's a great thing. Anytime you can be a problem solver, you make a lot more money than those that are trying to make things happen. And this is the opportunity to build wealth. You're not going to get rich overnight, but one of the things we sit down, we put a game plan together. Whatever your goals and dreams are, what you want to accomplish, we reverse engineer that so you'll walk away knowing exactly how many deals you need to do roughly in your first year to take success, okay? And another thing, why should you do this? Because we all know distressed borrowers. We all know distressed borrowers, property owners, tenants up there. You might as well jump in and help them out. Why wouldn't you? Why don't you learn about the right thing? Not, oh, I took a class one time or I understood that. No, learn from somebody who's closed on thousands of deals. Help teach you how to do that, because there is nothing greater, nothing more exciting and positive in what I do than getting stories from people who have changed their life. Nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was impossible, whether it was, hey, I was able to tell my wife to quit because of where we're at, or I was able to leave my job today and go full-time in this, or I was able to pay for a vacation that we've been dreaming of for 5 years, or I was able to retire my parents, okay, put my kid through school. Or you know what? The shit hit the fan, but I'm okay because of the things I've learned, the investments I bought and invested in because of what you taught me, Scott. It's a beautiful thing out there, everybody. So love for you to be a part of it. Like I said, go to noteweekend.com. That's where you get signed up for it. So you go to the, like I said, we'll also include a 22-page manual to go along with the class as well. So you can flip through it, take notes. The one-day online mini workshop, live stream it Saturday with me. Restreaming on Sunday, get the replays to watch, Cliff Notes version for you guys. 9 a.m. to 3 at least, sometimes 4, sometimes 5. Depends how many people are in the class, how many questions get asked. For the rock bottom price of $49. So love for you to be a part of that. Love for you to be part of our Note family and be one of the 1,000 people we plan on helping really change not only their lives, but also change the world here the next 12 months. So if there's any questions, I'd love to answer those at this point. For me guys and gals that are watching this live or catch us on the replay. If you are watching this on the replay, feel free, type in the questions in the chat roll, whether it's on Facebook or YouTube or whatever. Myself, my team will answer those questions. I'll be glad to get with you. But once again, everybody, love for you to go to noteweekend.com. That's the link that you want to go to, noteweekend.com, and get signed up for it. And once you get signed up for it, we'll send you the links to the replays from last one. You can start watching that now and be more educated when the thing rolls around. So if there's not any other questions or comments, we'll let you guys get back to your evening. Thank you so much for being a part of this. And the Note Nation Tour, Top 40 Tour rolls on Sunday as well, with our next market thing being Boston. So otherwise, be safe out there. A lot of opportunities in the Sacramento and California markets, guys, besides everywhere else in the country. It's up to you what you want to dive into and how much of that opportunity you want to add, call your own. So we'll see y'all later, everybody. Bye.